So you probably saw the headlines this week. MongoDB, ticker MDB,
Yep.
stock took a pretty big jump after their earnings report came out.
It definitely got people talking.
But, this isn't just another quarterly financial thing. It's more like a window, right, into a company that's really central to how modern software, and especially AI now, is being built.
Absolutely. And beyond the numbers, which were quite strong, the report itself, the call transcript, it gave a lot of operational detail. Helps paint a clearer picture of what's clicking for them.
Exactly. So that's our mission today, right? We've got the press release, the earnings call transcript, some analysis from the financial news sites.
Yep, usual stack.
And we want to really unpack it, figure out what's driving MongoDB's performance, what are their strategic moves, how are they dealing with competition, because that always comes up.
Always.
And what does their outlook really signal for, data, applications, the whole space? Basically, cut through the noise, give you the essential takeaways. Okay, let's dig in.
All right. So looking at their Q1 for fiscal 26, and remember, their fiscal year is a bit offset from the calendar year.
Right.
The headline numbers look good. Revenue hit $549 million. That's up 22% year over year.
And it beat expectations, didn't it?
It did, yeah. Beat analyst expectations.
And the profitability, that really seemed to pop, the non-GAAP EPS.
Right. Non-GAAP earnings per share hit $1, which was way above the 66 cents or so analysts were looking for.
Wow, okay. And non-GAAP, just quickly, that strips out certain things like stock-based comp, gives you more of an operational profit view.
Exactly. And their non-GAAP operating income reflected that too, $87 million. That translates to a 16% operating margin.
16%. Compared to what, last year?
Just 7% in the same quarter last year. So a really significant jump in profitability.
That margin expansion is definitely a key story here.
No question. And it wasn't just financials. Customer growth looked pretty healthy, too. They ended Q1 with over 57,100 total customers.
How many did they add in the quarter?
They added 2,600 net new customers sequentially.
2,600. That sounds like a lot for one quarter.
It is. Actually, it's their highest number of total net customer adds in over 6 years.
Okay. So for you listening, whether you're an investor or developer, whatever your interest, that kind of customer growth, adding them at the fastest rate in years, that usually signals something positive, right? Like broader adoption, platform health.
It's a strong indicator, yeah. And a huge driver behind that, as management kept emphasizing, is Atlas.
Atlas. That's their fully managed cloud database. It feels like that is MongoDB now, almost.
It pretty much is. Atlas now accounts for 72% of their total revenue.
Yeah.
72%. It just shows how critical that cloud offering is to their entire business.
So that core engine, Atlas,
Yeah.
How did it actually perform in Q1?
Atlas revenue itself grew 26% year over year, so still strong growth there.
Okay, and what did management say was driving that 26%?
Well, they pointed to a few things. First, just broad customer demand. Seems like businesses building cloud-native apps, anything real-time, and, increasingly, AI applications.
Yeah.
They're driving demand.
Makes sense. What else?
They also highlighted accelerating growth in their self-serve channel.
Self-serve. That's like developers or smaller teams just signing up online, right? No big sales process.
Exactly. And that channel, it had its highest net customer additions in over 6 years this quarter, just like the overall number.
Interesting. So that's hitting the developer community, maybe smaller businesses? That long tail.
Precisely. Shows Atlas is resonating there. And that's important because those smaller accounts, they can grow over time, become major customers. It's an efficient way to sort of land future growth.
Land and expand. So hitting the smaller end efficiently. What about the big fish, the enterprise accounts?
Yeah, they're seeing good results there too. They made a strategic shift maybe a year or so ago to focus more sales resources specifically on those larger enterprise deals.
And that's paying off?
Seems like it. They mentioned getting larger deal sizes and seeing higher sales productivity in that segment. So it feels like a two-pronged approach.
Yeah.
Efficient self-serve plus targeted enterprise focus.
Okay, covering both ends. Did they talk about consumption trends? That's always a key metric for cloud platforms.
Yeah.
How much are people actually using the service? Sometimes it's a bit of a macro indicator too.
They did, and this was interesting. Overall consumption growth for the quarter was, they said, in line with their expectations. So no big surprise there on the total.
I sense a but.
Well, yeah. Here's where it gets a bit more nuanced. They gave some month-to-month color, which you don't always get.
Oh.
They said growth was solid in February and March, but then they saw some softness in April.
Softness in April. Why?
They specifically linked it to macroeconomic volatility.
Okay. So that macro uncertainty we keep hearing about. It did show up a bit in their usage.
It seems like it did, yeah. But then they said things rebounded healthily in May.
Okay, so a bit of a dip potentially tied to the economy, but then it bounced back. That's a really crucial detail, that month-to-month fluctuation.
It is. It just reminds you that even with a popular platform, the broader economic climate can still ripple through usage patterns. The May rebound is positive, though.
Definitely. It suggests maybe the underlying demand is still there, even with some bumps.
Right. It held to their plan overall, but yeah, there's still some sensitivity under the surface.
Okay, so building on that strong performance, understanding the demand, where are they putting their energy next? What are the big strategic priorities, the investment areas?
Well, no surprise here. AI integration and the whole AI opportunity is right at the top of the list.
Right. But how does MongoDB fit in? They're not like building foundational AI models themselves.
No, but they argue they're incredibly well positioned.
Yeah.
Why? Because real-world AI apps, especially the ones enterprises want to build, need to work with complex data, context-rich data, often unstructured data.
Okay.
And their argument is their document model was basically built for that kind of data natively. They also kept saying they hear from enterprises that accuracy is, non-negotiable for AI.
Can't have models making things up in a business context.
Exactly. And to get that accuracy, you need to feed the AI models precise, relevant context. And where does that context live? Usually in the operational data stores, like MongoDB.
Gotcha. And didn't they just buy an AI company, Voyage AI?
They did. That acquisition really strengthens their hand in building these AI apps, especially the ones using RAG retrieval augmented generation.
Our RAG, right. Using your own data to make the AI smarter.
Precisely. Voyage AI brings leading embedding and re-ranking models. Embeddings are basically, think of them as numerical translators. They help the AI understand the meaning and relationships within your specific company data. It's the bridge.
So Voyage helps the AI find the right piece of your internal data to answer a question accurately.
That's the idea. And they were quite keen to highlight their new Voyage 3.5 embedding model. Said it performs significantly better than others and reduces the storage costs for these embeddings by over 80%.
Better performance and cheaper storage. That's a good combo.
Definitely plays well.
So what's the overall pitch here? What's the big value proposition for AI developers?
They're positioning themselves as the unified platform. You get the real-time data store, you get powerful search built in, and you get these smart retrieval capabilities with embeddings and vector search, all in one place.
Instead of trying to stitch together like a database plus a separate search tool plus a separate vector database.
Exactly. They argue their integrated approach makes it way easier and faster for developers to build these intelligent, responsive AI applications. They even have something called MCP server in public preview now, which lets you interact with your MongoDB data using natural language.
Okay, that unified platform idea sounds compelling. Are companies actually building a lot of custom AI apps on MongoDB now? Or is it still early days?
Management was pretty realistic here. They acknowledged, yeah, enterprise AI adoption is still early. There are hurdles. Lack of internal skills is one.
That's trust, right. The
Yeah.
hallucination problem.
Big one. Trust is huge. So it's definitely seen as more of a long-term driver. But they did give an example, LGO Plus, a big mobile carrier in South Korea, building an agent assist AI tool for their customer support reps. It runs on Atlas, uses vector search to help agents find accurate answers really quickly. So practical use cases are emerging.
Okay, so AI is a major focus. What else are they betting on strategically?
Application modernization is another really big push for them.
Modernization. You mean getting companies off old legacy systems, often those old relational databases?
That's exactly it. Helping customers migrate those older applications onto MongoDB Atlas.
This sounds like a massive potential market. So many companies are still running on ancient tech. How are they tackling that?
They're investing a lot in tooling, trying to automate and standardize the migration process as much as possible, make it easier, faster, less risky for customers to make that jump.
Smart. Less friction equals more migrations.
Right. And they even hired a new leader specifically for this modernization program, someone with a background in large-scale tech transformations. Shows they're serious about it.
Do you have an example of this modernization thing in action?
Yeah, they gave a good one, Zepto. They're a quick commerce company like instant grocery delivery based in India. Huge growth.
Okay. What was their situation?
They were running on Postgres and Redis clusters, but they were just hitting scaling limits because of their rapid growth. Things were getting slow, unstable.
Common problem with hypergrowth. So they moved to Atlas.
They did. migrated to Atlas, started using features like its built-in in-memory caching, sharding for scale, real-time analytics.
And the results?
Pretty dramatic, actually. They reported a 40% reduction in database latency.
40%, that's huge for user experience.
Huge. Plus, they could handle 6 times more traffic and saw a 14% improvement in application page load times. Those are real, tangible benefits that impact the business directly.
Definitely brings it to life. Any other examples?
They also mentioned CSX, the big U.S. railroad company, modernizing a critical operations portal on Atlas for better performance and scalability. So it's happening across different industries.
Okay, so AI and modernization are clear focus areas. What about just running the business, internal stuff?
Yeah, operational discipline was another theme, especially with the new CFO, Mike Berry, now fully on board.
Ah, the new CFO effect. What did they say?
Management talked about an increased focus on operating efficiency, driving profitable growth. They kind of framed it as just healthy discipline as the company gets bigger.
And did that discipline contribute to those better than expected margins we talked about earlier?
It did, yes.
Mm.
That plus the revenue beat. Margins got a boost partly because headcount additions were a bit slower than they'd planned across the company.
Slower hiring. Does that risk impacting growth or sales?
They were careful to address that. They said they don't expect it to negatively impact sales capacity or their ability to compete, partly because of those strategic shifts, like focusing more on enterprise, using self-serve more effectively. They feel they can still capture the market opportunity.
So getting more efficient without sacrificing growth potential.
That seems to be the goal. And yeah, it sounds like driving profitable growth through operational excellence is a core part of the new CFO's mandate.
Okay, let's shift gears a bit. Competition. This always comes up with MongoDB, especially competition from, well, the old guard relational databases like Postgres.
Which is super popular, open source.
Right, and also newer moves from companies like Snowflake and Databricks who've been buying Postgres-related companies. How did Mongo address all that on the call?
They were pretty direct. Assertive, even.
Oh, really? What was their take?
Well, interestingly, they framed the moves by Snowflake and Databricks buying Postgres companies as actually validating MongoDB's position.
Validating. How so?
Their argument is, this proves the operational data store, where the live application data sits, is really strategic ground, especially for things like AI inference, using models in real time.
Okay.
And they argued it also proves that building a good operational data store from scratch is hard. Their implication was Snowflake and Databricks maybe tried and couldn't do it well, so they had to buy something instead.
Huh. So turning the competitive threat into a sort of backhanded compliment? See, even our competitors know this is important and hard to build.
Kinda, yeah. And they went further. They questioned the real value of just adding another version of Postgres to the market.
What was their specific criticism?
Their core argument is that trying to bolt on features like JSON support or vector search onto a traditional relational database, it's just a superficial retrofit.
Superficial?
Yeah. They call it an admission, basically, that the fundamental architecture of relational databases, those rows and columns, just isn't naturally suited for the complex, messy, evolving data that modern apps and AI need.
And the problem with that retrofit approach, according to Mongo?
They claim it leads to problems in production. Poor performance, more operational complexity, higher costs, especially when you try to run demanding modern workloads, compared, of course, to their native document model, which they say was built for this stuff from day one.
So their pitch is, our unified platform database, search, vector, embeddings, all built together natively, is superior to trying to glue together Postgres plus a separate search engine plus a separate vector database.
That's the core message, exactly. They acknowledge Postgres is popular, sure, partly because people are moving off even older relational systems like Oracle.
Consolidation.
Right. But they keep hammering home their belief that for the new applications being built today, especially AI-driven ones, their architecture has a fundamental advantage. They also threw in a point about flexibility in MongoDB running anywhere, any cloud or on-prem without code changes versus maybe some vendor-specific lock-in with certain Postgres flavors.
So a very confident stance on their architectural differentiation, especially for AI.
Definitely confident. They're not shying away from that comparison at all.
All right, let's wrap things up by looking ahead. Their financial outlook for the full year. What did they guide for, and what does that tell us?
Okay, so they updated their guidance for the full fiscal year 26. On the revenue side, they nudged it up slightly by $10 million to a midpoint of around $2.27 billion.
Okay, a small bump on revenue. What about profit?
That's where the bigger change was. They significantly raised their non-GAAP operating income forecast
Yeah.
by $57 million.
57 million, that's a decent jump.
It is. They're now targeting a 12% non-GAAP operating margin for the full year at the midpoint. That's up from the 10% they initially guided for.
Wow. So much more profitable than they first thought.
Seems so. And that flows through to the bottom line, of course. They also raised their non-GAAP EPS guidance to a midpoint of $3.03 for the year.
So what's driving that improved outlook? What does it signal?
Well, it reflects that ongoing confidence in Atlas, its growth trajectory, but it also clearly reflects that increased focus on margin improvement, on operational discipline that we talked about.
The new CFO effect again, maybe?
Could be part of it. But they did balance it a bit. It's not all upside. There are some timing things expected in their non-Atlas business.
Ah, the older non-cloud part of the business. Are there headwinds there?
Yeah, they expect a high single-digit decline year over year in non-Atlas revenue for the full fiscal year.
Why the decline?
They specifically called out about $50 million of that headwind being due to the timing of multi-year license renewals. It's a bit of an accounting thing, where big contracts hit revenue in certain periods, and it seems more of those are expected later in the fiscal year this time around, so it makes the first half look weaker relative to the second half.
Okay, so Atlas is strong, driving the overall raise, but the legacy business has some timing quirks. Makes sense. What about shareholder value stuff? Buybacks?
Big news there, too. They announced a major expansion of their share repurchase program, authorized an additional $800 million for buybacks.
800 million more on top of what they already had.
Yep. Brings the total current buyback authorization up to a cool $1 billion.
$1 billion. That's a pretty strong signal of confidence from management, isn't it? And a clear commitment to returning cash to shareholders.
Absolutely. Signals they think the stock is undervalued relative to long-term potential. And they said they plan to actually start buying back shares in Q2, the current quarter.
And they have the cash to do it, right? What's their cash position like?
Very strong, sitting on about $2.5 billion in cash and investments. So plenty of flexibility there alongside the buyback commitment.
Okay, so let's try to pull this all together from our deep dive.
Yeah.
MongoDB starts its fiscal year strong, beats expectations, shows really significant improvement in profitability.
Driven mainly by Atlas, their cloud database, which just keeps growing and making up more of the business.
Right. And strategically, they're doubling down on AI integration, positioning themselves as the go-to database for modern AI apps, and also pushing hard on helping customers modernize off legacy systems.
While also keeping a closer eye on operational efficiency, driving those margins up, which investors clearly liked.
And on the competition front, they came out swinging, making a clear, assertive case for why their native document architecture is better suited, especially for AI, than relational databases trying to add features.
Yeah, very direct about that.
Uh-huh.
And backing it all up with a raised full-year profit forecast and that massive new share buyback program.
Management definitely projecting confidence in their tech advantage and the market opportunity ahead.
Seems that way, yes. Conviction in their approach.
So here's maybe the final thought for you, the listener, to chew on. As every business seems to be rushing towards building more AI-powered applications, will MongoDB's approach, that unified document-based platform, actually prove to be fundamentally better suited for these new complex workloads? Will it win out?
Or can the incumbents, the traditional relational databases like Postgres, adapt quickly enough, bolt on the needed features effectively, and maintain their dominance? It's a huge question.
It really is. And overlaying all of that is the economy. How will those macroeconomic conditions, that volatility we saw even in April's numbers, continue to shape how fast this whole data infrastructure shift actually happens?
Definitely a dynamic space.
Yeah.
Critical part of the tech landscape to keep a close eye on.
Absolutely. Lots to think about there. Okay, that's it for this deep dive. Thanks for tuning in.